Hey, traders and investors, swing traders, day traders. I thought we'd take a deeper dive into what happened last week in the markets, which was not expected. I was anticipating that there'd be a turn, but not to the degree that there was. It was impressive, and let's take a look at it. Let's start with the broader markets, S&P 500, and why it was likely we should have some kind of a bounce or at least stabilization. This was a pretty good drop from here to here. Prices had dropped pretty sharply in a short amount of time, about 5% from that high to the low, as everyone became jittery that the Fed wasn't going to cut in December and all of a sudden began to shift. Yes, they're going to do it. So why were we looking for it to turn? Well, pretty simple. As I always say, look to the left. And the S&Ps were coming down to an area of a prior low. However, the retracement was pretty darn deep. And typically, after a retracement of this depth, you don't get a retracement all the way back up to the high. Environments change. So we had this big move. Now, we've been talking about the underlying breadth of the market being terrible for probably all year for the most part. And what we saw happen last week was the breadth exploded. It was this big move. One of the things that I shared with subscribers to our advisory newsletter and our ETF letter was that as we look to the left, we also measure under the hood, so to speak, to see what's going on a broader market perspective. And what we saw is stocks under the 200-day moving average were coming to an area of the prior low. So that was confirmation. And then those above the 40-day moving average was in the area of prior low. However, it wasn't extreme, historical extremes like it was in April. Nonetheless, we were looking for prices to have some kind of a stabilization, probably a bounce. And it was a monster bounce. 5% in 4 or 5 days, incredible. Not unprecedented, but typically what happens, when it happens, is that it happens after a protracted decline like this. So this decline that occurred at the beginning of the year, that was a 20% drop, little mini bear market. By the way, all of these lines that I put on my chart are options expiration dates. The red ones are monthlies and the black ones are quarterlies. And typically, not always, but typically you get some kind of a move after the options expiration. So we keep track of that to be aware when options expirations are over, because the handcuffs, so to speak, come off. All the hedges are released, and most times the markets will have some type of a move, sometimes a continuation move, sometimes a counter trend move. This was a big counter trend move. So what does this imply to us? What it implies is that the markets are likely to continue to go higher, but after some consolidation. Common sense tells us that this was too far, too fast, and who wants to buy after a 5% advance into an area of price resistance? Well, not too many. What we're going to look for is some kind of a retracement, a mild retracement, maybe some sideways price action, and then continue higher. So the next step is, well, what are we going to buy? So I want to look at these ETFs. And this is something that we look at every week and during the week, of course, but every week in the ETF newsletter that only trades ETFs. And then when we utilize these ETFs for the swing trading letter, we look inside of them to see what stocks are participating. And then if things are beaten down, maybe we do credit spreads, things that are turning near highs or turning near lows. So what we see is the S&Ps, we were just looking at a line chart, but it had this big move up to resistance. Odds are it's going to stall up there and consolidate, and everyone will reevaluate what's happening up there. Is it going to collapse back down again? Breadth doesn't suggest that's going to happen. Does it go sideways? What develops from there? And also this week, there's a lot of economic reports that we haven't had because of the government shutdown. So that's going to begin again. So we'll see whether there's confirmation to those rate cuts, whether there's some question as to that. So industrials had a big move up. They didn't get quite up to the high. And if you can visualize a trend line, which I don't need to draw lines, I just look to the left. I know it's coming up to resistance, but trend line traders will draw their dots connected there. If I want to look at stocks within that sector, here we go. We could look at stocks within that sector and then see what did well on the week, what did poorly on the week, and we can sort this and see like builder's source, and we could open up a chart, make a new chart, and connect it to that new chart. And I could make it into some kind of a fancy chart, but let's connect this blue. And we can look at those stocks within the sector that did well. So something that did well had a big move up here, building materials. This is going to be affected by interest rates, which dropped last week quite sharply. So this would be something to look to buy on a pullback. Needs to consolidate. We're not buying something up like this several days in a row into some resistance there. But you see what we're going after here. Looking at stocks within that particular sector, and you can see the kind of moves that occurred. Was it short covering? Was it just outright buying? Well, clearly it was buying, but probably short covering as well. And a big move up in Delta Airlines. And so as we look at these, we can see what did well, what outperformed, what underperformed, and so on. I can sort this by looking for wide range bars. And so we can find things, wide range bars on the day. So lots of different scans. And these are something that I share with subscribers if they have this platform. As they become subscribers, we share this at no additional cost. But let's look at the other sectors. All right. What outperformed, what underperformed? Technology underperformed. How do I know that? Well, it's not above the 50-day, where these moved well above the 50-day. And this is at converging moving averages, and this suggests that it's going to stall there because that's where it fell from. It's really just common sense. We don't need indicators. We don't need trend lines. We don't need fib lines, and we don't need VWAP. None of it. Just look to the left. And the moving averages are what I call visual aids, and help us see what the trend is. Let me expand on that a little bit. This 50 MA is equivalent to the 10 MA on the weekly time frame. What that means is here the weekly time frame was trending up. This correction has moved that weekly time frame to sideways. There's been some corrective price action there. So the moving averages, visual aid, give me some insight to what's happening on another time frame. Communication services, this has been in a longer correction and now had a very nice move up, and it cleared the prior pivot high. I like that. I like this because this consolidating at this point is going to give us an entry point. So I'm stalking this in the coming week to see what it does here. Does it pull back to this little breakout area? I'm going to recommend this to our ETF letter if it forms the way it should and how I want to see it form, meaning if it collapses back down, common sense, we're not going to recommend that. We're not going to buy it. I need to see some kind of confirming pattern to my bias, which I don't have yet. Energy has been sloppy. It's been all over the place for a long time, but it pulled back to support and it popped back up. A lot of stocks in here are just too erratic, like this is, but it's maybe shaping up. You can see it's in a trading range. Not interested in that. Financials really been kind of crazy. You can see this rounding top. It moves down, it spikes up, it spikes all the way back down again, and all the way back up again. It's really insanity, schizophrenic price action. Institutions, traders are getting whipsawed. They just don't know what to think. Interest rates going to go down, they're going to go up. Anyway, it's all over the place. But what does it do at this resistance area? Does it consolidate and go sideways? Does it have a shallow pullback? I'm going to be interested to see what it does. Materials, for a couple of years, it's just been all crazy price action. It breaks out, it breaks down, it comes all the way back, tries to break out, it fails. It's erratic. But we could look at stocks within here to see what's outperformed and underperformed. Wash, repeat, the same things. Wide range bars. You can take a look at this. MOS, LYB, and I can open up the chart and we could check it out. But you get what I'm getting at here, right? And we look at the stocks to see, is this attractive? Now, it's not attractive. It's in a downtrend. Maybe it's bottoming. I'll look at the weekly time frame and see, is something more happening here? And it's right near this major support. So while we look to the left on the daily chart, we look to the left after bigger corrections on the weekly chart. And it's down here at this major support. It's going to report earnings in February. It's down a whole bunch. Tells me that the worst is probably over. It's been crushed and it's likely to stabilize. And so I can now continue to look at this and see if it goes sideways for a while, and it may become attractive. Now, it's not attractive yet. Maybe a retest, some sideways price action, some correction through time, moving away from the downtrend so that energy, if you will, begins to dissipate within the downtrend going sideways, building a base. And those that use indicator, your MACDs will start to diverge. It'll start going sideways, and you'll start seeing some indicator information to support it bottoming. That's not happening yet. All right, but we don't use indicators. Consumer discretionary had a nice move up off of the lows, coming up into resistance. Consumer staples, this is another one that we have in our ETF letter. Why? After this downward move, because it was down near major support. Look to the left. And it's a defensive sector. So as the markets were correcting, odds were some money was going to flow into the defensive sector. Now, as we had this big move up last week, money didn't rotate out of defensive. Not at all. They kept coming for it. And that's a good sign that this can continue higher to this resistance area and the 200 MA, the red line. Healthcare is another one in our ETF letter that we got in down near this area here. And it's doing great. It's coming up to some resistance. I think it's going to keep going. We'll also have some other healthcare sectors because that's hot right now. Medical devices and a few others. Real estate, not interested. It's really too erratic, but I think it probably comes up a little bit, especially if we get more confirmation of that rate cut. Now, utilities is another one in our ETF letter. Looks great. It consolidated. It pulled back. It had this little breakdown failure and retracement. I think it's going higher. And if you look at the weekly time frame, you'll understand why. Because it's in a beautiful uptrend. It's pulled back to an area of minor support, rising 20, which is equal to the 100 MA on the daily. Move up. I think it makes new all-time highs. Let's look at a few others. And you can set up a platform like this where these little layouts here, you just click from one to the other and you see what's doing well or not. Tech, NASDAQ 100. Nice move up. It cleared the highs. It's underperformed. And why? Semiconductors. The AI theme is the bubble bursting. Different opinions there. They got overheated, so that's getting beat up a bit. NVIDIA wasn't even up last week after that rally. So clearly institutions are continuing to sell that. Internet in a downtrend. Big correction. Underperformed. Still came off of the lows. Software. Why is it underperforming? Well, they got overheated too. Look at Microsoft. After the earnings, it collapsed. So definitely underperforming. Let's see if we can get a retest and reversal pattern. Aerospace and defense, big correction. So as big as the move was in the broader markets, a lot of stuff just bounced. Maybe dead cat bounces. I think so. Home builders. Now, interest rates came down. That helped these home builders, which have been under pressure since September. So strong move off of the low. Let's look at the weekly time frame. And a nice correction within the weekly time frame, a bottoming tail bar. So it spiked down and came back up again. I like it. Buy pullbacks. I want to see it stay in the upper 50% of that wide range bar. I like it. In construction, same thing. As long as interest rates stay relatively low, and if they move lower, this will continue to do well. Copper. It's a good indication for the economy, which, depending on where you look, some say the economy is still doing well. This is an industrial metal. But if you go looking at grocery stores, they're not doing well. People aren't spending money. Restaurants, they're not doing well. Staffing companies, they're not doing well. The Russell 2000, that was really the big winner. Huge move. And this is indicative of what is happening or it did happen in these markets. There was this correction that started. It broke down under major support levels and it came roaring back. More schizophrenic price action. I mean, the move from that low to that high was almost 10% in a few days. Kind of crazy. Another positive. Well, this is a positive because it's speculative stock. So it's basically a vote for risk on. And transports would have been doing nothing for a long time, came roaring back. So that's a positive. Banking, which was questionable, looks like it was going to break down, came roaring back. Another positive. Biotech has been doing well. Another AI theme, which is great. Maybe they're going to have a cure for cancer. The money that's being thrown away for different things that this government spends money on. Well, if money was used for helping people and cure these diseases, well, maybe that's beginning to happen with AI. Let's look at a few others. All right. Broker dealers, just whippy price action, not interested. Aerospace and defense, another one. Healthcare providers, not doing as well. as broader healthcare. This is more focused, so that's not doing as well, but maybe it's bottoming out. Telecommunications, another erratic price action, rollover, breakdown, came back again. Bitcoin, watch this in the coming week or so. It's possibly making a bottom, but ideally, so this is the Bitcoin ETF. If this comes down here, let's say it breaks down next week and takes out this low and comes closer to this area there, we're going to be looking to be buyers down there. But I don't know if it's going to come down. Nobody does. Maybe it consolidates. Maybe we get a continuation pattern. It's in a downtrend, so I want to be more conservative. I'd like for it to pull back if that's in the cards, looking to get a little position in there and see what happens. Gold miners look great. They had broken down. They're coming back. Gold's coming back. I think it's going to continue to move higher. And silver, if you go and look at silver, it's new at all-time highs. Equal weighted Qs came back, so another way of seeing that breadth expanded. So equal weighting doing much better. Retailing, another one where money rotated into underperformers in a big way, but up at resistance. So you see so many of these ETFs are at resistance, which to me communicates back off, sit on your hands at the beginning of next week. Let's see what develops, because I'm not buying that resistance. I'll buy pullbacks. Medical devices, this is another one. Our ETF letter got in on a pullback. Big, nice move, 5-6% in a week. We'll take it. There's the healthcare again, and there's biotech again. Let's look at the Magnificent Seven. Not quite as magnificent as it was. And here's NVIDIA. It wasn't even up on the week, and it went down the last 2 days. We'll see if this bottoms out or whether it's the next leg down for this to the next support level. Apple held up really well. It's been stalled up there. So far, it's one of the strongest. I'd say the second strongest. Google is the strongest. You can see the strong trend. We don't need any RSI indicators or fancy indicators. We just look at the chart. Look at the distance from the 20 MA. Is it a little extended? Yes, but it's strong. Buy pullbacks until something fails. Meta, that's in a little bear market. You can see from that high there to that low, it already fallen almost 25%. It's bouncing. There should be sellers somewhere up in this area, and then we'll see whether it does a retest, what it's going to do. Amazon, earnings, that little E there, that's earnings, down almost 17%. Pretty big correction in a short amount of time. Tesla, that broke down, maybe because of the market. It's coming back. I'm going to see what it does at this resistance area. Netflix has been getting beaten up for quite a while. It's not ready yet at all. Downtrend. Didn't bounce much last week. Institutions are still selling it. Magnificent 7 ETF, little bounce there. We looked at NVIDIA. Look at Microsoft on the earnings, down 15-16%. Pretty big correction. There'll be sellers up there. So we looked at a whole bunch of ETFs. Our game plan for this week is to see what the reaction is at these resistance areas, how much they pull back, do they go sideways? We'll see what the economic reports have to say, and then we're going to pick our spots to enter new positions if we get those setups on shallow pullbacks. And stay tuned to see how this unfolds in the coming weeks. If you have questions, email me, Greg at Master Trader.